In this video, we're going to be talking all about Apple on a short-term, intermediate-term, and longer-term basis because it just broke below its 50-day moving average, and we got some great questions from one of our members. Here's the first question from Steven. Steven writes, quick questions for you. What is your take on Apple crashing through the 50-day on above average volume? So before I can really give a solid answer for that question, we need to think through three other things. First thing is, what's your time frame? Are you looking at this on a shorter term, on an intermediate term, or are you looking at this longer term? Let's figure that out first. After that, is this something that you already have and you're trying to figure out what to do with it? Or is this something that you've had your eye on and you're looking to acquire? And lastly, if you do have it, where did you get in? All these things are going to be very important to figuring out what to do and why, and kind of thinking through that whole process. So right now, I don't have any of this, right? Like I don't have Apple in any of my accounts. Well, maybe my long-term 403B, I'm pretty sure that one of those mutual funds that the employer gives has bought this. So yeah, I'm sure that I do have Apple from that perspective, and we'll look at it. But I don't have Apple in my intermediate term account or my swing term account. So let's go through all those scenarios and walk through what the thought process for me is like. I also want to mention that one of the most important things that we can do for ourselves is to be consistent with whatever our trading plan is. And then after we've completed our trading plan, then that gives us the ability to go back and evaluate, was this a good plan? Was it not? Where can we make improvements? That in itself is going to be far more valuable than anything that we make on any individual trade, because being able to go back and evaluate those kind of plans, that's what's going to allow us to grow and get better. And we need to be able to really be able to see where we can make those improvements. And if we're not sticking to the game plan, or if we are very inconsistent, well then it makes it that much harder to evaluate the plan by itself. We need to fix the consistency part, but we also need to be able to figure out, okay, was this a solid plan? Was it not? Where can I make improvements? Okay, so on to all the other stuff that I already mentioned. So let's talk about Apple as a swing trade first. So whenever I'm looking at a swing trade, or any trade for that matter, I always like to look at both the time frame that I plan on trading as well as the time frame immediately above it. So for a short-term swing trade, I'm going to be trading off of a daily chart, but I'm also interested in the longer-term trend. So I'm going to look at a weekly chart as well, and I'm going to be looking at them one stacked on top of each other. So I have the daily chart of Apple up here, and I have the weekly chart of Apple down there. And so I can see that the overall trend of Apple is trending higher. And so if I'm looking for a shorter term swing trade, the first thing that I'm going to ask myself is, okay, what's it doing? How can I get into this? All right, so the first short-term swing trade that I see is this back here, where Apple was setting up, whoops, let me grab the trend line. And so it was setting up with this, and this pattern here to me looks kind of like a cup with handle, right? And let's just take our little measurement tool over here and see how deep it was. It was about only 10% deep, and over here, this handle was only about, give or take, 4%. Right? So that's a halfway decent swing trade. And you could have gotten in either right there at the pivot, or you could have even gotten in when Apple broke above the 50-day moving average, because if you take a look at this, right? So it broke below the 50-day moving average, and it was starting to get some resistance at the 50-day, and it formed a little resistance level right here, right around 157.75 for multiple days in a row. And so when I'm looking at swing trades, I like to see slightly bigger consolidations and look for shorter consolidations within that, and then see, okay, where's there a short-term floor being built that should be a halfway decent support level if we do get a breakout like we have right here, right? So you have this pattern, this cup with handle pattern. It makes the handle, and if it does break out, it should go, and it shouldn't violate that low. So how do we get in as early as we possibly can? We get in right as it would crack back above the 50-day moving average, as it breaks above that. And if you want to be a little bit more conservative, right as it would break above that descending trend line. Right, so you're in this, and it starts to work, and at that point, for me, I'm either got in right on the 50-day, so I'm looking at either a 2.5% risk, or I'm looking at that 4% risk. So let's just say I use that 4% risk. So at this point, right over here, right, so about 4% at around 167 or so, that's when I'm moving my stop up to break even, because I've already made 1 times the amount that I've risked, right? So taking that off the table, now there's no more of my own capital at risk. Now I'm just playing with the house's money. Now it gets up to an 8% gain. Now I'm starting to take bits and pieces off, and then maybe at around here, well, I'm not taking anything off yet, because at 10%, I'm about 2.5 times my risk. And I always, the way that I scale out into strength is by selling 2 times my risk, I'll take a little bit off. Then about 3 to 4 times my risk, I'll take a little bit more off. And it kind of goes like that. So at 2.5, I'm not really selling into strength at that point, because I already took some off at 2 times my risk. But as it starts to weaken, right, so like right around here, I'm probably moving my stop up a bit, and I'm probably selling a little bit as it starts to violate the 5-day moving average and the 10-day, and down here, I'm probably out of the position altogether, right? And then it just kind of chops around for a little bit, and if you wanted to get in, maybe this is a swing trade over here. I don't really like this setup, but you could draw a descending trend line like that if you wanted it. And yeah, there's not really much of a setup here at this point. Let's add the 100-day moving average, right? So let's go over here. Let's add moving, just moving average. All right, so let's get the moving average in there. For some reason it likes to default to the 9 moving average, and you can set it up to whatever you want. So I'm going to put 100, and let's see where that lands. Okay, so right now you have Apple. It's pulling back. Yeah, it fell below the 50-day moving average on heavy volume. You could say that it's had kind of a long run. Now let's measure this, right? So from back here, really, it's run about 55%, and it dropped maybe about 8%. What's the exact percentage? I'm curious now. About 6%. Okay, so 6% isn't really that, it's significant over a couple of days, but the stock is rolling over and we're done? Well, that remains to be seen, right? But from a swing trade, there's not really much of a setup where I would look to get in just yet. If you yeah, even if it broke back above the 50, like it needs to make more of a floor. I would look at this over here. Does this hold as a floor? That's a little bit closer to that 100-day moving average. So what level is that? That's like right around 169. So around 170, 169, 168 even, a little bit of a range for a level of support. That's where you would want to see like, okay, maybe this is a place where I could pick my spot and start to get in. And if we zoom back out, has it really respected the 100-day? A little bit, like a little bit over there, kind of violates it there, but recovers pretty quickly. So maybe if you were looking to get in, you wait for a test of the 100-day to wait for that, or you could wait for it to catch support, establish support, and then try to make some kind of a breakout. You can't even really draw a trend line, like there's nothing. Like that's just a couple of days. That's way too aggressive, in my opinion, to go for something like that. But that's just one way that you could look at some potential swing trade ideas, and certainly keep Apple on watch lists, because it is a leader. It's proven to be a leader, and it's kind of been outperforming the S&P 500 over the past maybe month and a half or so. This line down here that I'm pointing to is the relative strength versus the S&P 500. So I think that it needs a little bit more time. It is a big cap leader, like I said, but yeah, continue to wait on it. So anyway, that's my thoughts on it for a swing trade. Let's take a look at it from an intermediate term perspective. So looking at this chart, again, let's focus on more so on the weekly than we did on the daily. So the scary thing that Stephen points out is that it broke below the 50-day moving average. It did it on heavy volume, and it's already had a significant move. So that is a sell signal. And you kind of see that same sell signal developing on the weekly chart as well. Today's Friday, and if we blow up this weekly chart here, it did fall below the 10-week line. It's almost 2 o'clock right now, so it looks like it's going to close near the low of the week. It did it on above average volume, and yeah, that's not something that we like to see in our stocks, right? We like them to go up, 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 but that doesn't always happen, right? Like there is going to be some ebbs and flows of the market, and our job is to see like what's normal and what's abnormal. Okay, so it did fall below the 10-week line on heavy volume. Has it done that before? Well, what's been the consequence? So looking back, right? So it kind of did the same little thing over here, right? Like you could say that it's starting to test, and then it failed and it broke below the 10-week line, closed at the lows. That's terrible. Time to get out, right? Well, from there, that ended up being the bottom of some kind of a base. Arguably, that's another cup with handle. Let's draw it so it's a little bit clearer, right? And the real key is to try to figure out, like, is something under distribution, or is the stock being accumulated? Well, and we look at the general price and volume action to see like, okay, what's going on and where are the breakout levels, and try to evaluate risk, all that kind of fun stuff, right? So it's kind of making this floor over here, like it doesn't violate that. Well, what was that? 142.20, and yeah, it does not violate 142.20 for the whole base, right? So that's actually a halfway decent floor. Looking to the left of the chart, I always like to look to the left of the chart to see like, okay, where is a logical level of support developing? And you kind of have that right at around here, arguably, right? So right at around 140-ish, it tested that on the way up, and it didn't violate that. So that would be where I would look for a level of support. And so it's continuing to run up. You don't really have that 3-strike rule coming into play yet, right? So in another video, and I'll link it somewhere, if not up here, down in the description below, we have a 3-strike rule. This is a rule that Adam Sarhan taught to me. And the 3-strike rule says that we'll consider exiting a stock if it breaks these 3 strikes. So strike number 1 is a break of support. And because we're looking primarily at intermediate term, we'll look at intermediate term support. So where is support on this chart, right? So we could say that there are former resistant levels turn into support. That resistance level there, like it attempted to break out of this, but that's a breakout failure, right? You can't really say that, oh, well, that support, there was no weekly follow through, so that doesn't count. So support is actually down here at this point, right? So on an intermediate term basis, I would look for Apple to maybe get support somewhere in the neighborhood of down here. Possibly, you could make the argument that it starts to catch support somewhere around there, but the final level of support within that base is right there. And that kind of correlates to this former high too, right? So if you want to have a range of support, you're kind of looking at this, right? So, well, what are those levels? That's 166.46, and the high over here is 164.94, so it's, well, 165, right? So between 165 and 166, that's where you're kind of looking at for Apple to get support as the last line of defense. Does it get there from here? Well, who knows, right? Nobody has a crystal ball or anything, so those are the levels that we need to be prepared psychologically that, yeah, it might test it at this point. So I just learned a lesson the hard way. Always set up your notifications to be off and put your phone into airplane mode when you are recording. Yes, this is being recorded on my iPhone 10. So anyway, back to what we're talking about. So looking at Apple, the next thing that we're looking at within this 3-strike rule is going to be trend lines. And Apple does violate this this intermediate term trend line. Started back in September. It hadn't violated that in 4 months. It tested it 1, 2, 3 times, and now it broke below that trend line. It's on pace to close the week below that trend line, and it's also closing below that 10-week line as well. So the last line of defense within this 3-strike rule becomes support, which we said was in the neighborhood between this over here, that actually drew a little bit better that time. So yeah, about 164.94, and that low is 166. So really between 165 to 166, that's where we're looking for support. That's it. So the question then becomes, okay, how do I want to try to play Apple now? Do I have Apple? And if I did, when did I get in? What am I risking at this point? Did I risk, am I somebody that got in way back here? Am I somebody that got in over here? Am I willing to allow this level to be tested? Something that I like to do in all my trading. Well, really, for the intermediate term trading account that I have, I'm just following the model portfolio that we have in the advanced stock report service that Adam puts out, and just for ease, and it's designed to be a very low touch strategy. So that way you could only go in and worry about updating orders really once a week, or every once in a while there'll be something that needs updating intra-week, but it's pretty rare. But the way that one trades, it's kind of an all or nothing thing, where if it does hit your stop, you're completely stopped out. With this, if you're managing your account, if it's pulling back and you're getting 2 strikes, you could begin to scale out defensively as certain strikes are hit. So if 1 strike is hit, you could scale out a little bit. If strike 2 is hit, you could scale out a little bit more. And if that 3rd strike is hit, then you could scale out of the rest. There's so many ways that you can look at and trade and manage risk. There's no real one right or wrong way. It really goes to what's going to be right or wrong for you and what's your risk tolerance. Are you able, or are you willing to sit with what would amount to, let's see, from where we are over here. So if you have this and you haven't sold yet, are you willing to sit through another 3% give back to see if you're right or wrong? If you're somebody that entered on that breakout, then maybe you want to start locking in something so that way you still have something. If you're somebody that got in way back here or before or back over here, and you have a little bit more wiggle room between where price is now and your break-even point, then that's going to be really up to you. As far as a trend goes and as far as the 3-strike rule goes, we have 2 strikes so far. And a violation of this over here would be strike number 3 on an intermediate term basis. The final way that I want to look at Apple is on a really long term. So this is something like if I'm holding Apple for my retirement account, this is what I would be doing. So I brought up a chart of Apple on a monthly chart. And what this is showing us here is a 12-month moving average and the 40-month moving average, right? So looking back here, like if we bought Apple way back here in 2009, you have this run all the way through 2012 where Apple does not violate that 12-month moving average. And from there, you would have had roughly a maximum 367% gain, and if you sold on a break below that, you would have had a 274% gain, right? And so it depends on how long you're willing to hold these things and how long you're willing to sit through a correction, right? So between here and Apple doesn't get back above the 12-month for basically a whole year, right? So are you willing to sit through an entire year-long correction in a retirement account? Maybe you are. But if you wanted to just exit below the 12-month line, you would have done that back here, and you could have gotten in back above the 12-month line back over here, right? And from that point, if you're playing the long game, then you would have a 60% gain between October 2013 and August 2015. And so just doing that, like right now on a long-term chart, like, yeah, that on a monthly basis, that's not a very positive month. Like it did close higher for the month, but it did have that negative reversal. It's still way above the 12-month line, and it's still trending higher. So from a long-term trade, it hasn't really done anything wrong yet, at least not in my opinion. So that's my 2 cents on Apple longer term. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally answer you. Also, if you like the video, click that little thumbs up button. That's really going to help us. And also make sure that you subscribe to the channel so that way you get every single update. Thanks again for watching, and I'll see you again in the next video. Take care and have a great day.